Hey, hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Daily Stock Market Analysis, where we look at technical charts and try to understand what happened in the market during the day and plan for a better trade for the next day. This is analysis for February 23rd, Friday 2024, tomorrow. We had a V-shaped volatile day today. It was a bear trap day. Yesterday was a bull trap day. So market is very, very volatile. Let's get into the wrap up. All information is there put in here except for the institutional purchases that is for which has not come as of now. We'll come back to that wrap up after we look at the charts. Here we go. So here we have the plain charts. Look at that. It's a hammer on the top. Could be indication of a reversal. Means you don't need to confirm that unless it goes below the hammer's low. So otherwise it gets nullified. But regardless of that, the wick size indicates that there is strong support. Look at where it has bounced exactly from the 20 exponential moving average from the daily. So very good support where it got bought in. That's what has happened. Look at Banknifty. Very close to the 20 and 50 exponential moving average, but it got bought in. It closed indecisive, but it's almost like a pin bar. This could be also an indication of a reversal on the ongoing trend. If it is up, it could indicate a reversal, but only if it is confirmed, if the price goes below the candle low. Otherwise it gets nullified. So what I move. Look at what happened during the intraday. It was complete reversal. That's on the Nifty. It was around 200 points dip, and then it is 370 points. So 1% dip and 1.7% up move. Banknifty, it was 1% down, or nearly 1% up, full V shape. Here Nifty, it broke out at an expiry day after the 230. It did big breakout moves on the upward and made even a new all-time high, completely surprising the already trapped bears. Right, so that's the kind of move that has happened. Let's see where it is placed now. So it is a decent bounce from the 20 exponential moving average. It had done two retracements, small 1.5 retracement. This is a 2.5 retracement, and the next retracement came in and took bounce immediately and then made new all-time high. So it's 250, 250 is where the new all-time high is. So once again, at the top of the channel, the condition is still there, but it is still not completely confirmed unless it moves above and closes with a candle that is above this consolidation. It's a flag pattern breakout, multiple flags in there. This is one of those flags. It is already confirmed to break out from there. And what's what is happening? It's well within the trend line channel. Well, Banknifty, it had slipped down the blue channel multiple times, formed a W pattern, and then confirmed a breakout of that. Cleared the lower low, lower high, negated that, and then heading towards top. That's when it got a bear trap yesterday. And following that bear trap, it did a further big drop that was around 500 points drop, and then 500 points, almost 500 points. So literally finally is closed negative, actually 100 points down, 0.21. That's flattish close, flattish negative on Nifty. Could not close above the 47,000, but cleared it in between, but it could not close above it. And Nifty, it was ferocious after the 2 p.m. or something. It not only did a V-shape and then much beyond that. So Banknifty has fallen down multiple times below this blue channel and once again climbed back with double pattern and is maintaining the levels there. It's heading towards the top of the channel. That's what it looks like. And the levels, if you look, it's all-time high of 22,250 is the first hurdle. That's the all-time high. Then it will be 20 to 300 to 500, 600 likewise upside. Or every 100 would be a rounding number of resistance that we will face. So 20 to 600, 500, there may be resistance. Looking at the size of the consolidation target, if you see. Support will come in first 20 exponential moving average at. So first is 22,000 of big rounding number. 20 to 100 also can be a good support. 22,000 is a bridge, means it comes to 21,881. That's 20 exponential moving average support. Then you have 21,520, 50 exponential moving average support. Then you have Fibonacci support at 21,360. And then you have the previous swing lows at 21,160. If that is closed, then 21,000 would be the big rounding number support. That is the down. Banknifty similarly, the resistance upside would be to clear the previous swing high. That's at 363, 47, 363, clearing that. Before that, 47,000 is the major hurdle. From the rounding number resistance will be there. Once 47,000 is cleared, then 47,363 has to be cleared, and then 48,000 is a gap and a big rounding number, and then all-time high at 48,636. Downside for support would be at the swing lows at 46,400 nearby zones, and then after that 46,250 has got exponential moving average and 50 and 20. Then 45,750 would be there, 100 exponential moving average support. That is breached, then you have 44,800, and before that 45,000 also is there. In between, the rounding number 46,000 also will come in as support. So all the big rounding numbers are supports, are support zones. Then the exponential moving average is supports, and then the Fibonacci retracement from the top swing, right? So it had gone as low as 61.8 retracement. That's the worst that can happen. Then it climbed and cleared the 50, 38, now 23 also was cleared, could not sustain a close above that. So once it is 47,200 is cleared, there will be, and we have a green close above that, it will be above all the Fibonacci retracement levels also. Right, so far looks good. Let's now look at the graph. So it's a positive close in the Nifty, very good post 162, but the banks did the V-shape move but could not really make further up moves. Yes, it had faced resistance, but it had a flattish 100 points loss. That's the 0.21 percentage, and it is indecisive. So Nifty looks a little indecisive and slightly lagging behind with respect to the Nifty, which is once again hit another new all-time high. Every week it has multiple. And this week is probably third time it's making all-time high. So that's how it is. Overall, we had a volatile day, V-shaped recovery on both indices with a ferocious recovery in the case of Nifty. So basically, we have not corrected much, as you can see. 32% rally had only 4.5% of retracement. While Banknifty had a deeper correction, but Banknifty could not close above the 46,000 today. This is a mistake. Yesterday's. But Nifty could clearly close above 22.00. But exponential moving average is clear fine. Resistance about levels we have seen. Nifty was a small buying on Banknifty by the FI, small buying by the Fyers yesterday, and small selling by the DIS yesterday. Today there's no idea how they would have done it, but somebody, either of these people might have done big selling. Yes, the data is coming. Look at this. FS who are the guys who are selling, and DIS who are the guys who made the V-shaped recovery possible. 1,800 points bought by the domestic institutions and 1,400 sold by the FI. So this FI selling continues. Meanwhile, in between they pause for a small buy in 1 or 2 days, but majority they were sellers also. So today's sell-off is also done by the FIs, which is not that great. US market had recovered after the results outcome, Fed minutes and all that. They had closed finally green, but still the FIs are selling. Right. That's not very positive. But resistance levels and the support levels we already discussed. I'm not discussing that again. Short-term momentum, the Banknifty and the Nifty both are. The Banknifty is climbed back in this bullish zones. after I am slipped into the sideways on yesterday. Banknifty is still remaining sideways, but it's trying to get into the RSI above 60. ADX trend indicator is saying it's still bullish, but weak strength in both indices. VIX is cooled off 4.6% after the Fed minutes and some other events. No more events are left 15.2, but it's still above 15, so it's not in a low volatility regime. Today also it is highly volatile. So I'll be slightly cautious about that. If it is heading further up towards the 20, you have to stay out or cut short the position size and play it. Bollinger Bands are expanding on the upside, so indicates potential up moves on both indices basically. The market had recovered some of the lost momentum of yesterday once again, and Banknifty has not lost too much. Just like yesterday also it had not lost too much. It lost, but it recovered immediately. So it all depends on the Banknifty whether it will be able to catch up to the and move at least to the all-time high. Another 1,500 points are left, so that's what all eyes will be if that does not happen. So even HDFC is not performing good today. So that is the only stock that is dragging behind the Banknifty, and that is why the Nifty cannot break out to the further higher levels. So it is going down across the sector indices, and if we look at the daily charts, the auto, firm and reality, they all have bullish momentum. Metal, FMCG, and IT have sideways momentum, so it's a mixed bag. Heavyweight shows the ultimate maximum. You can see that it's a green, except for the HDFC and the Kodak banks again down. Reliance and ICICI Bank all stocks were maintaining the bullish momentum now. Those are all sideways. Kodak Bank is the only one that's in bearish mode. The HDFC, TCS, and ITC also has managed to climb back into the bull zones, into the sideways zones from the bear zones. HDFC also recovered into the sideways zones. So two recoveries have happened, which is very positive. Using it as a green, cut to green after some small retracement. It had only 50 minutes and showing some hammer kind of patterns at the very top, heading to once again towards all-time highs. Looks like dollar is flat as slightly red, 103.7. Rupee remains weak, 82.8, being managed by the RPI at 83 and nearby levels since ages. Crude oil is flat in red, 77.7, and gold is spiking green at the top. Every dip that happens in between are opportunities for you to buy quality stocks and long term investing in this area mode. Traders' direction is not clear yet. Nifty's direction is bullish. Nifty also showing symptoms of bullish and then trying to get into the bull zones of the momentum. Once it is confirmed, that's when you have to take directional course. Until then, you'll have to take forward team non-directional course. That's all that can be. Apply your strategies according to that. Strategy videos are there, separate playlist. Check out that on options. Tomorrow is a weekly expiry portional strategy taking day because you'll have some premiums on Friday. If you try to take it on next weekend, then premiums would have decayed. So that's the time to do that. So overall, market is still having a lagging Banknifty, but no serious damage happened as it was expected. It trapped the bears and basically showed that market direction is still up. But there is huge volatility. You have to be careful. Direction could turn out the moment HDFC or Banknifty shows bullishness once again on the short term. So once that happens, then everything will be flying on the upside. But you have to be extremely cautious. Anytime reversal could, the condition zone is still there on the top. It's at the very top, and it's still consolidating, not giving clear signal of breakout with the Banknifty lagging. You have to be slightly cautious. Right? That's all I have. If you're not subscribed and watching this, please subscribe and share it with friends so that it reaches out to max. And happy trading, happy learning, happy investing. Bye bye.